What if I told you Tesla's $1.4 trillion valuation might just be the riskiest bet on Wall Street? Yes, Tesla, the company revolutionizing EVs and promising a self-driving future, has a market cap larger than Toyota, Volkswagen, Ford, GM, Mercedes, and Stellantis combined. But here's the kicker. Tesla produces less than 5% of the vehicles they do. So is this the greatest growth story of our time, or are investors walking into a trillion-dollar trap? Stick around because the answer might shock you. Tesla. Just hearing the name probably sparks strong opinions. For some, it's the ultimate disruptor, a trailblazer in EVs, autonomy, and clean energy. For others, it's an overhyped bubble propped up by Elon Musk's larger-than-life persona and Wall Street's fantasies. In this video, we're diving deep into the numbers, the hype, and the reality behind Tesla's staggering valuation. By the end, you'll understand why Tesla could either lead the next industrial revolution or come crashing down in a spectacular fashion. So if you're an investor or just curious about the hype, stay tuned. Trust me, you don't want to miss this. Tesla's market cap. At $1.4 trillion, that's in a league of its own. For context, Toyota, the world's largest automaker, is worth around $230 billion. Volkswagen, $90 billion. Ford, a mere $55 billion. Combine all the major automakers, and they still fall short of Tesla's valuation. Tesla only produced 1.85 million vehicles in 2023. Meanwhile, those legacy automakers churned out over 40 million cars. That's right. Tesla produces fewer cars in a year than Toyota does in a month. So why the massive gap? It comes down to expectations. Investors aren't just valuing Tesla as an automaker. They see it as a tech company, an energy provider, and a pioneer in autonomous driving. But here's the catch. High expectations bring high risks. Now let me ask you, would you pay $120 for a single dollar of Tesla's earnings? Because that's exactly what Tesla's PE ratio is, 20. For comparison, Ford's PE is around 6, and Toyota's is about 10. This means Tesla's stock price assumes massive growth. But can they deliver? To understand Tesla's valuation, we need to look at where the money comes from. In 2023, 80% of Tesla's revenue came from vehicle sales, primarily the Model 3 and Model Y. The remaining 20%? That's split between solar battery products, 9%, and services like repairs, insurance, and charging, 11%. But here's the issue. While the automotive sector drives Tesla's revenue, it's also their most competitive and capital-intensive segment. The margins are razor-thin compared to software or services. And let's not forget, competitors like GM and Volkswagen are ramping up their own EV production, often at lower price points. So is Tesla really worth 6 Toyotas, or are we simply paying for Elon Musk's vision? Quick question. Do you think Tesla's valuation is justified, or is it pure hype? Drop your thoughts in the comments. I'd love to hear your take. Elon Musk. Love him or hate him, he's central to Tesla's story. Musk has repeatedly stated that Tesla's long-term value depends on solving full self-driving. He even said, and I quote, "If you don't believe in Tesla's autonomy, you should sell the stock." Now, that's a bold statement. But here's the problem. Musk has been promising full self-driving for nearly a decade, and the technology still isn't there. Sure, Tesla's vehicles have impressive driver assistance features, but true autonomy? That's a whole different ballgame. And let's not forget Musk's history of missing timelines. Remember when he said the Tesla Semi would be on the road by 2019? Or that the Cybertruck would launch in 2021? Investors are betting big on Musk's promises, but what happens if he can't deliver? And speaking of big promises, wait until you hear about Tesla's upcoming Cybercab, a driverless vehicle that could either revolutionize transportation or send the stock crashing. We'll get to that in a minute. One of the most surprising reasons Tesla's stock has soared recently is politics. Since the November 2023 election, Tesla's stock has jumped nearly 70%. Why? Many investors believe a Trump presidency will create favorable federal regulations for autonomous driving, accelerating Tesla's revenue timeline. But here's the risk. Political expectations can change overnight. If regulatory support doesn't materialize, or if competitors like Waymo or Cruise outpace Tesla in self-driving tech, the stock could take a serious hit. Let's talk about Tesla's boldest project yet, the Cybercab. This vehicle will have no steering wheel, no pedals, just pure autonomy. Tesla aims to produce 2 million units annually by 2026. If they pull it off, it could be a game changer. But here's the reality. Developing a fully autonomous vehicle at scale is insanely difficult. Regulatory hurdles, safety concerns, and technological challenges make this a high-risk, high-reward bet. And given Musk's track record with timelines, skepticism is warranted. Do you think Tesla will crack full self-driving by 2026? Let me know in the comments. I'm curious to see how optimistic or cautious you are. Using traditional metrics like free cash flow, some analysts estimate Tesla's fair value at around $200 billion. That's a far cry from its current $1.4 trillion market cap. Why the disconnect? It all comes down to growth expectations. Investors aren't just betting on Tesla's current business. They're betting on its future in autonomy, energy, and AI. But if even one of these bets doesn't pay off, the stock could face a brutal correction. So is Tesla stock a $1 trillion opportunity or a $1 trillion trap? The truth is it's both. Tesla has undeniable strengths, innovative products, a visionary leader, and a strong brand. But it also comes with sky-high expectations, significant risks, and a valuation that leaves little room for error. If you're investing in Tesla, remember this. You're not just betting on electric cars. You're betting on autonomy, energy, and Elon Musk's ability to deliver on his promises. What's your take on Tesla? Are you bullish, bearish, or somewhere in between? Let me know in the comments below. And if you enjoyed this video, don't forget to hit that like button and subscribe for more deep dives like this.